Welcome to Readact TV. I'm Don Friedman, President of the RIA Digital Assets Council. Today we have Marcos Veremis, Managing Director of Investments at Evanston Capital. Marcos, welcome to the show.
Don, thank you for having me. It's a pleasure. Thank you.
So let's jump right into this. The first question we have is, you've provided institutions with digital assets investment advice when you were at Cambridge Associates. If a financial advisor is skeptical about digital assets, what reasons would you cite for investing in them?
Yeah, I would say there are two broad reasons for investing in digital assets, and they're not mutually exclusive, by the way, in the case of digital assets. I'll explain. First, it's digital assets like Bitcoin can be an inflation protection asset or a general hedge against stress in the traditional financial system. We saw that in the European crisis with Cyprus and the deposits and so on. Digital assets can also be a venture capital type growth exposure to innovation, I would say, in general, and therefore growth in a portfolio. Now, we can distinguish perhaps between Bitcoin and the digital asset space as a whole. Let's call Bitcoin the hedge against inflation and other macroeconomic risks. And let's call the digital asset space the Internet of Value and all the businesses that can be built based on the concept of internet native assets. So in that sense, an early stage form of venture capital. I would add to that that it does have a few differences to traditional venture capital. First, it involves a new technology. So think the early to mid 90s with the web, for example. Second, there is often, as obviously with digital assets, early liquidity, which you didn't have and you don't have in traditional venture. And three, anyone can buy into it. So you don't need to be a member of a club to buy digital assets like Bitcoin or Ether, for example. So to summarize, a hedge and also a venture capital like investment.
Got it. Makes sense. Makes sense. Next question we have is, how should advisors go about adding digital assets to their clients' portfolios?
Yeah, so there is a range of ways to invest in digital assets. This ranges from owning some of the digital assets like Bitcoin directly or with an exchange, and even via traditional fund structures. There are index funds out there too, with top 10, top 20 digital assets. There are also active managers such as hedge funds and venture capital funds that invest both the equity of blockchain-related companies and digital assets. And finally, there's the option of a fund of funds who can hopefully pick some of the best active managers for an investor. Now, as you know from my previous work, I believe there are some really good hedge funds and venture capital funds out there, but the issue there is that they might be access constrained and also at this point, have high minimums and so on. So I will say a simple way to get into the space would be to just buy Bitcoin and Ether. That's a very simple way of entering this space as of now. So Bitcoin as a hedge, we mentioned that before. What Paul Tudor Jones called a hedge with a kicker, where you also have great intellectual capital behind it, unlike any other hedge. And Ether as a bet on decentralization and the decentralized value exchange outside the traditional financial system and all the new applications that can be built on top of that, which is known as decentralized finance these days. So one could start there with these two assets. Now, what kind of split? I don't know the answer to that. Probably more Bitcoin than Ether, because Bitcoin is just been around longer. It has higher market cap, more network effects, and so on. But if you do invest, though, I think you need to have a 5+ year investment horizon. And these are some risky investments. There's definitely a lot of risk. So you need to size them appropriately. Don't size them more than the capital you're willing to lose. But I would add, as important to that would be to ignore and forget the daily prices and the volatility and just hang in there for 5+ years. You've seen that with Bitcoin more recently, right? Where it took only a few days for it to rise in value. I remember a lot of people back in 2018 were selling digital assets at even at 4,000 or 3,500 Bitcoin when it bottomed out, and they should have held. At least as of now, they should have held. So just ignore the daily price movements. These are early stage venture capital investments. Hold on to them for 5+ years, and hopefully you're going to see substantial appreciation.
Well, that's great. Thank you, Marcos. We appreciate your insight, and thanks for being a guest on Readact TV.
Thank you, Don. Thanks very much. Thank you.